Reducing your limited company's corporation tax bill doesn't always need to involve complex or convoluted tax planning. There are some simple but yet effective things you could be doing to ensure your business isn't paying more than its fair share of corporation tax here in the UK. In this video, we will cover what exactly is corporation tax, keeping detailed records, paying a director's salary, investing in your business, pension contributions, and finally, claiming legitimate expenses. Before I get into today's video, be sure to hit that subscribe button as well as the notification bell to make sure you're kept up to date with all of our latest content. This really helps us to produce more helpful videos and to get you real quality advice from real qualified accountants. Corporation tax is a tax on a company's profit. So how much corporation tax your company pays depends entirely on how much profit the company makes. The rate of corporation tax in the UK for the 2021 to 22 tax year remains at 19%. So for every £100 of profit a company makes, HMRC will expect to receive £19 of corporation tax. Corporation tax is applied to profits and not revenue, which means any allowable expenses or allowances will help to reduce profit and the overall tax bill. So let's look at 5 common ways that you and your company can reduce your overall corporation tax bill. At the beginning of April, we granted early access to the Accounting and Tax Academy membership site. In July of this year, we're opening our doors to everyone. Our members will have access to in-depth tutorials, free downloads, and exclusive discounts. And the best part is, it's absolutely free to join. Head to the link in the description box below to register your interest today. It's surprising how many companies overpay corporation tax purely because they haven't kept detailed records of their business expenditure. Where possible, you should transact business expenses through the company bank account to create a clear paper trail and avoid paying through your own personal bank account or worse still with cash out of your own pocket and then never reclaim from the company. Just by paying out of your own personal account or with cash, you end up creating an additional unnecessary step which consumes your valuable time. Common examples of such expenses include subsistence, that is food and drink, travel and parking expenses, just to name a few. In these situations, it is essential that as a minimum, they are recorded through your company bank account and where possible, receipts obtained and uploaded into the cloud. Now, for these type of expenses, each individual transaction may not be particularly high, but as these are often regular recurring expenses, they do accumulate and quite often add up to material numbers. Using a piece of accounting software such as Xero with HubDoc can help you keep track of your business expenditure and even scan receipts for you with your smartphone. This entire process can and should be systemized and automated where possible, and this particular discipline will give you a positive return both in terms of tax savings and time efficiency. Now, quite often you will be a director and a shareholder of your limited company. There may be multiple directors and shareholders, and the good news is that you as a director shareholder have the option of paying yourself via a salary or dividends, or a combination of both. Dividends are paid out to you, the shareholder, from profits post corporation tax. So they do not obtain corporation tax relief, whereas directors' salaries are an allowable expense and will reduce the overall corporation tax bill. Now, it's important not to go off and start paying yourself a director's salary your company cannot commercially justify or afford just to save some corporation tax. And the more you pay yourself, the increased income tax and national insurance liability will eventually outweigh any corporation tax saving made. It is very common for you director shareholders to pay yourselves an optimum salary with the rest of your income being paid via dividends through profits. This will ensure maximum tax efficiency and tax savings for both your company and you. The amount of salary you as a director should be paid will depend on your personal circumstances and if you have any other sources of income in a particular tax year. We've already done an in-depth video on how to determine and pay yourself the most efficient director's salary in the 2021-22 tax year. Click on the banner or follow the link in the description box below to view this. When you invest in plant machinery and fixtures and fittings for your business, the typical way to account for that new asset is to spread the cost of it over a number of years as its value depreciates. Now, plant or machinery does not only relate to heavy industrial plant, but includes modern hardware such as laptops and printers. Fixtures and fittings include items such as desks and chairs as an example. For tax purposes though, your company can utilize a form of capital allowance called the annual investment allowance. Now, it sounds like a bit of jargon jargon, but it's not that complicated at all. In simple language, the annual investment allowance will allow your company to deduct the full cost of the asset from profits in the year of purchase, which can greatly reduce the corporation tax bill. Although the annual investment allowance is currently £1 million, from the 1st of January 2022, it will fall to £200,000, which is still quite sufficient for many of you solopreneurs and small micro businesses out there. Let's take a closer look with an example. Ryan Limited is an e-commerce trading company forecasting pre-tax profits of £100,000 for the year ending 31st of December. The owners of the company are considering buying some hardware and equipment, such as laptops, printers, and peripherals at a total cost of £60,000. The hardware will have an estimated useful life of 3 years, so ordinarily in Ryan Limited's accounts, depreciation will be spread over 3 years. That's £20,000 per year through the income statement. However, providing Ryan Limited purchase the equipment before the 31st of December, they will be able to deduct the full cost, that is the £60,000, by utilising the annual investment allowance, leaving them with £40,000 of taxable profits in the year to 31st of December. Your limited company can make pension contributions on behalf of you, the directors, and your PAYE, that is pay-as-you-earn employees. Pension contributions are allowable for corporation tax purposes. So for every £100 contributed to a pension scheme directly, that is gross from your limited company into an approved pension scheme, it will save £19 of corporation tax in the 21-22 tax year for your limited company. In the 21-22 tax year, you as an individual can receive a total contribution of up to £40,000 to an approved private pension plan without incurring a pension savings tax charge. Contributions in excess of this are subject to the pension savings tax charge, which should be considered when making any contributions. We've gone into a lot more depth on pension contributions in a previous video, so once again, click on the link in the description box below to view this. And finally, claim legitimate and allowable expenses. Now again, don't go off on a spending spree through your company just to save some corporation tax. That's like letting a dog's tail wag its body. But the beauty of being a company director shareholder is that there are an array of legitimate expenses you can claim through your company and subsequently reduce your corporation tax bill. Expenses are usually deemed allowable providing they are wholly and exclusively for the purposes of your business. Unfortunately, HMRC do not consider all business expenses allowable. An example of this is client entertaining, which many companies incur but must be added back to profits when calculating the corporation tax liability. Once again, we've done a more detailed video on allowable expenses through your company, which you can find by clicking on the link in the description box below.